Welcome to a Wiser Retirement podcast. Before we get started with the episode, I wanted to let you know about a new free ebook available on our website. This ebook goes over the top reasons most financial plans fail and covers what a quality financial plan should consist of. The link to download Top Reasons Most Financial Plans Fail is listed in the episode notes. Now on to today's episode.
Welcome to a Wiser Retirement podcast, where we believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom today is my co-host, Missie Beach. Hey, Missy.
Hey, Casey. How are you doing?
Good. Welcome back to
Thank
the
you.
podcast.
Thanks.
Well, today we're going to talk about something that I know that you're very passionate about, recovering financially after a divorce. And you're passionate about this because you're not divorced yourself. We should
Correct.
make that clear.
Yes.
We're actually, you have a designation.
Yes.
Centered around divorce recovery, right?
Yes. It's some more letters after my name, CDFA, which is Certified Divorce Financial Analyst, which basically means some extra education and training specifically for the divorce designation. So what it is it's training in both the legal ramifications of divorce and the financial area. Because obviously attorneys are well-trained and well-versed in the law,
Right.
but attorneys do not know the financial side of it. You know,
Attorneys have a hard time with math, don't
yeah,
they?
they do. You know, they know how
So
to.
weird to me.
They know how to divide by two, but it doesn't really go much farther than that. So that's where this designation comes into play for a lot of clients. And so I help them through that process as kind of a side partner with attorneys. And whether it's on the front end before the assets are divided, I mean, that's like the key time to get involved in the relationship.
Right.
But a lot of times I just come in after the fact, and then I'm a partner with usually women to guide them through kind of the recovery process.
Right. So explain a little bit about your role prior to divorce being finalized. I mean, we're just in the negotiation stage, let's say. How is this designation, or you specifically, helping in that role?
Okay, so prior to the divorce being finalized, there's the asset settlement negotiation that's going on. So there's a lot of back and forth with attorney to attorney, and that's really expensive. So my role is trying to minimize all the back and forth. And so I try to help clients, and this will help both sides of the equation, both the wife and the husband, by looking at the assets and trying to do a fair settlement. I mean, that's what families want, is both parties to be made whole. So it's not about winning, you know, for the wife or winning for the husband. It should be looking at it from a family big picture.
Right.
So what I try to do is divide the assets evenly and forecast out what that's going to look like long term. So looking at the client's financial plan over the long run. And so it's not always rosy. When you divide a household's assets, it's obviously not the same as when you are looking at a family's big picture. So I help tell the attorney what it's going to look like for the client, and kind of give the wife an idea of what the new normal might look like and set some expectations.
Right.
Because a lot of women go into the divorce process thinking that their life isn't going to change. And so sometimes it takes another voice in addition to the attorney to let them know that, you know, the new world is going to be different than the old world. And think of it as a financial reset. So you control your new destiny. And that's not always a bad thing. You know, whether you were the saver or the spender in the marriage, doesn't matter. You erase all that and you start from ground zero.
Yeah. It's funny. on social media, well, let's talk about divorce rates. I mean, first marriage divorce rate is at 42% right now.
Yikes.
I did see this stat. I found it on the internet, so it has to be true, right?
Oh yeah.
I'm trying to find the source actually. It was sourced somewhere on is it on an attorney's website, but first marriage failure 42% in the U.S. right now. Second marriage is 60% failure.
Oh, jeez.
third marriage failure is 73%.
Oh.
Average age of divorce right now is 30. And then average person waits 3 years before getting remarried. And there's 100 divorces per hour in our country right now, which is crazy.
That is crazy. You would think after someone undergoes that process the first time, that would be scarring enough.
Right. And for women, it's hard to imagine anybody under the age of 20 getting married, but 27% of those end in divorce. You think that would be the highest one, right? But it's actually 20 to 24, 36% of women are getting divorced. And then as you get older, it really starts slowing down. Actually, past 40, it drops significantly.
Oh, okay.
You can make it past 40. So when you think about dividing assets, it really, well, my point was on social media, I've seen people they have like these divorce parties. They got divorced, they got free of them, and they're celebrating it. And I always thought that was sad. Because in particular cases that I've seen, there's multiple children involved, and they see that, and that's just it's such a sad situation. But they always say things. Well, they took them to the cleaners and all these other things. And it was interesting is when you really dive down into the divorces that I've seen, assets really just kind of get split 50-50. Yeah. And the husband or the spouse making more income might complain about the alimony and the child support, but it's really not that much different than when they were married. It's just now you have to write a check for it instead of paying out a credit card for it, right?
Yeah, and I always tell all my divorced women, don't focus or fixate on that alimony and child support. A lot of them will get all bent out of shape on the amount or the duration and feel like, they're owed more, but it's just for a limited term anyway. So
right. There's very few alimony cases where it's paid for life.
Yeah. I know a couple, and in Georgia especially, it's very uncommon.
I mean, even if you agree to it, the judge may not agree to it.
Exactly. Yeah. So Georgia's not a very alimony-friendly state to begin with. So if you get divorced in Georgia, just, it's not a big component of the settlement. So just kind of get that off your radar. And don't lose sleep over it. Be thankful for what you are granted, and, we'll try to make that part of the plan going forward. But what women need to focus on is reinventing themselves and boning up their job skills.
Right.
And a lot are shocked to hear that because, they think like, oh, well, I haven't worked since before the kids, and I don't have any marketable skills. And
right.
I try to just reframe the discussion and let them know, like, yes, you do. You're well educated. A lot of these women even have master's degrees, and they just haven't used them because they've been the spouse that have run the household for so many years.
Right.
And then I counsel them, you're not going to get a new job just blindly sending out resumes over the internet. That's not the way to get a new job. Because,
especially with the gap in
yes, you got
work
it.
history.
Yeah. Employers look at that and they see that and they're going to think, oh yeah, this woman is not, employable. So I encourage networking because that's how so many of my divorcees get jobs. Because through networking, they know someone who knows someone that knows that this woman is solid. She's well educated. She can multitask. She's done all this volunteer work. So she is marketable. And that's how they command really good salaries even after being out of the workforce. They don't have to go back in at entry level. They can pick up where they left off through networking into a new corporate job or whatever type of job it might be.
So let's go through a checklist we put together of kind of steps that you should go through after divorce is over. So let's start with number 1.
Okay.
Gather all financial information.
Yes. So they just need to take inventory of what they received in the settlement and where it is, because usually it's scattered all over the place. If they haven't been clients with an advisor, with Wiser in the past, typically, there's $1,000 in this checking account over there, and $2,500 in a random savings account, and these little brokerage accounts strewn about because someone wanted to dabble in some day trading or whatever it might be.
Right.
So it's important to put together a binder or something, a spreadsheet, and just take stock of what's out there.
And a lot of times, things get divided, but they don't ever actually execute it. So I've seen cases where 401ks were supposed to have been divided, and then they just sit there, and there's no quadro that's been done. So it's go and execute and collect.
Mm-hmm. Absolutely.
Gather.
So that's one of the first things that I do is get a copy of that settlement agreement and figure out what was supposed to have happened, and did that happen? And make sure things were retitled and moved to the right places.
And then this is where a lot of people, even people who aren't getting divorced, want to stick their head in the sand, but that's creating a budget, understanding where your money's going, right?
You're so right, Casey. So often, people just kind of operate with money in, money out, and it all just kind of works by the end of the month. But divorce presents a new reality for both sides of the equation, that your dollars are split running 2 separate households. So money is tighter, and you really need to look at where money's spent. That's when, you're diving into your Amex statement or whatever, looking at your subscriptions. Do I need this? Is there a cheaper way to do this? And it's not a bad thing. It would, families should have been doing that before the divorce. So
and quite honestly, you really should be doing it. If you realize you're going down that path, there's no turning back. You should have all this stuff written down already.
Oh yeah, you're right. Prepping for the divorce, doing the financial statements.
I feel like that's not always the case. People, especially with one spouse being in the dark. So a lot of the women that have come through our office, they have no idea what the money is. They hand over an Amex for everything and maybe have a little bit in a checking account, but they really don't know what their monthly expenses are.
Exactly. And that's...
So how can you negotiate a fair settlement?
It's so hard.
If you don't know where you're starting from.
Yeah. So that's during that negotiation process, I tell my female clients, you have to demand access to that information, and the other side is legally required to give it to you. So ask.
So what we've done in past with women in that situation is we've asked for the last 3 months of checking and credit card statements, and then we just go through and categorize everything. Yeah. And it actually helps on the form that you have to fill out for the courts anyway, but more importantly is to understand what expenses that they have.
Yeah. And it is a tedious process.
It's very tedious, especially this day and age, because, what is Amazon? Was that a needed purchase? Was that dish detergent, or was it a book or something for the kids? You don't know. It gets hard to categorize, which is actually our third point, negotiate a fair settlement. So you want to make sure, I've seen cases after the fact. There's nothing you can do about it. And it's, spouses of like business owners, and they said, oh, my attorney said that valuing a business is really difficult, and I shouldn't even worry about that. And yet they probably left millions of dollars on the table in the end.
Yeah, because we all know
it's really sad. It's to the point where you can't even say
value.
anything because you're like, well, there's nothing can be done about it at this point.
Because the business is that cash
Just
cow.
really bad attorney.
Yeah. Uh-huh.
Yeah, I've also sort of learned that you have to make sure that the attorney is advocating for you and not just billing billable hours.
Oh, absolutely.
And I don't know. I mean, we have our attorneys here that we refer out to, but I don't know how to pick a good one versus a bad one. Just if I was in a new town, I wouldn't know how
it's
to
hard
pick.
to vet someone just with an initial interview.
Yeah.
It's hard to know who's got the fight in them and who's got that knowledge to really negotiate a true settlement versus a, sure.
I mean, we've been coaching a lady through one here recently, and what's interesting is the husband's just kind of quit working.
Yep.
He owns multiple businesses, and the sales are all of a sudden down, and
yeah, imagine that.
And the courts just buy it.
Yeah.
The courts just buy it as oh yeah, tough times.
Yeah,
I'm like,
they
no.
It's intentional.
You're just like, no, this is intentional. You need to at least do the average. Throw out 2020, but do the average over this time period and the average projection. But they don't listen to.
They don't look at trends. They don't look at
They don't do any of that.
Causation.
So it's very, very important that you have an attorney that understands business evaluations.
Yes. And not be afraid
not
of
just
that.
to get one, but understand what they say.
Yes. Mm-hmm.
Right?
Dive into it.
Yeah. It's and that's where I think that's where the financial advisor can come into play as well.
To read the valuation report.
Right. Right. Think about this. Think about an orthodontist, let's say, that is revenue's dropping. But you look at the P&L, they have these little packets that they get. They're disposable packets that they want to work on your mouth.
Oh, yeah, with all the tools.
Right. So when you look at the P&L, that's increasing.
Okay.
So how could the number of people you're serving increase, but yet the bottom line drastically decrease?
Yeah, I don't think prices went down for services provided.
Exactly. So it's just pointing things out like that, going, hey, I bet you there's a large stash of cash somewhere that's going to work its way back in after the divorce is settled.
Yes, exactly. Or looking at credit card statements to see that, oh, look, there's a brand new car payment, but yet he's claiming inability to maintain alimony payments.
Right.
So, yeah, a little forensic accounting always comes in handy.
Exactly.
And that's not hard. It's just looking.
And always having representation. I mean, we've had employees here actually do their divorce, and it was amicable, and they just did everything themselves, and they went in and said, Judge, we're going to get divorced, and attorney kind of rubber stamped it, and off they went. I would argue that each side should always have representation. You always you don't want to lawyer up as like duking it out, but after you've come to a mutual decision, then you would want two opposing attorneys to look at it and say, these are the cons. These are the pros and cons of the situation. But all too many times I've seen people do that, and they miss something.
Yeah, it's never as simple as it looks at.
And with the children, if you don't like your parenting plan after the fact, I'd say it cost you at least $20,000 to go back and undo it and try to change it after that parenting plan's already been put in place.
Or once the kids turn 18, there's no obligation for anybody to pay for their care.
Yes.
But, I mean, we all know they turn 18, they're not off the payroll.
Correct.
So it's important to try to document that in the settlement agreement. And you'll have attorneys say, oh, no, we don't need to put that in there because they're over 18.
Right.
But then all these empty promises of, oh, yeah, I'll pay for that. I'll pay for these college expenses. I'll pay for fraternity dues. Then somehow they never get fulfilled because it's not in the agreement, so it's not legally enforceable.
Right.
So you have to push for that stuff.
Yeah, that comes from experience. And you think attorneys would know that, but not all of them do.
No.
Dealing with debt. So unfortunately, you know, the major cause for divorce a lot of times is your financial situation.
Yeah.
So most likely there's going to be a lot of debt there. We're not all Tom Brady and what was his wife's name?
Giselle?
Maybe, yeah. She made more money than he did, which was crazy. But yeah, I doubt they had any debt that they had to really fight over.
No. And the divorce itself costs big money.
Oh,
and
yeah. Probably just to separate, just to do the asset sheet probably cost them a couple $100,000.
Oh, yeah. But yeah, so clients are accruing huge credit card debt to pay attorney bills, which is sad.
Yeah.
So, you know, at Wiser, we're so debt averse that we're always going to counsel clients to clear that debt ASAP. I mean, you just have to face it and get rid of it if you can and start with a clean slate.
If anything, at least have a debt elimination plan in place. So if you know that you're negotiating, you're going to have to carry this debt out, know exactly how many months it's going to be before you're clear of it.
Yeah.
And so have an understanding of that.
Commit to extinguishing it. And the other thing is make sure there's no joint debt remaining. Separate yourself from your ex because you don't want your credit records tied to each other at all.
You know, we're a white glove service, and even then sometimes things get past us. We had a woman pass away just before Christmas, unfortunately. She was in a terrible auto accident, but her daughter, we're still clearing out, the estate, and I came across yesterday multiple bank statements with her and her ex-husband.
Oh, wow.
And fortunately, the money in there is not super significant.
Yeah. But
technically, he could just go there and just withdraw the money and walk away. And I was like, I didn't even know these accounts existed. She only told me about these two particular accounts.
Yeah.
She never referenced those.
Oh.
Perhaps she forgot about them herself.
Mm-hmm.
Perhaps they're actually his. I don't know.
Yeah,
but we're about to go find out.
Because her name's on them.
But her name's on them. So it's it's dealing with all that and making sure there's nothing left over for sure. I'll go kind of out of order on our next couple points, Missy. One is, you want to be building an emergency fund before you invest for your future. So we'll start with that next. Build an emergency fund.
Absolutely.
You just came through probably a very emotional period. And so you need to start rebuilding your safety net.
Yeah.
Before you ever think about investing or doing anything with that. In fact, it might be taking some investments and converting them into liquid cash to have as your base.
As crazy as that sounds, that's the way that a lot of people need to do that, to get that liquid cash socked aside to meet, car repairs that are unexpected or just other household expenses that might come up or a job loss, heaven forbid.
Right.
But yeah, 3 to 6 months of core living expenses need to be in that emergency fund. And that just gives you the peace of mind that, some unexpected repair, when your AC goes out isn't going to cause you more stress.
Right. Correct. And then once you have that emergency fund built, which probably ought to be at least 3 to 6 months of your expenses, no different than people who aren't getting divorced.
Yeah.
Then you can start investing for your future. And that's where you think about alimony and child support, and you think that's going to be there forever because maybe it goes 3 years, 5 years, 10 years, 18 years. Hopefully you don't get divorced with a newborn. That'd be terrible. But ideally, it's going to be there for a little while. You have to look at that as a transition period. Okay, I have this income. It's helping me support where I am, but I have to replace that with something.
Oh, absolutely.
And that's your runway to get started to figure out what that's going to be.
Yeah. So I counsel my divorcees during that period when you're getting alimony, that's when you need to max out your 401k if you can, or, that may be a lofty goal, but sock away as much as you can in your retirement plans, because that's your time of maximum income when you're getting that alimony and you're employed.
Yep.
So that's going to be probably your highest income years. And so you need to save for you. Then kind of as an added on bonus during your settlement, what I love to see happen, since a lot of retirement account savings during the working years are traditionally in the husband's name and not the wife's name, sometimes the wife's retirement savings are a little light. So during the settlement, I love to see written in there that the husband might make annual contributions to the wife's Roth IRA if she's under the Roth contribution limit. So we've done that for a couple clients. And that way her Roth IRA is funded typically during the alimony period.
Which is only like $6,000 a year.
So so it's not huge. It's not a big ask, but every little bit helps.
Yeah, absolutely. The last point is just to seek financial advice. So reach out to Missy.
Yeah. I just don't go it alone, because you don't have that financial expertise, nor should you be expected to have that expertise.
Right.
So just get a sounding board, get someone to hold your hand, whether it's me or someone else out there in the financial world. We're happy to help and just be your partner.
We also have a couple episodes related to that. Episode 46 of our podcast, Financial Terms Everyone Should Know. We actually dive in with Matthews and Brad and talk about all these terms, APR, APY, and what all that stuff means. We have episode 69, Achieve Financial Success in Retirement. And I think that's the part that I get most concerned about, is you had a family financially that's probably on a decent path to retirement, but now we have two separate people. And a lot of times the women are making less than the men. How do we get them to a successful retirement? And so it's such a huge adjustment period. I feel like getting divorced is probably a lot like having a spouse that passes away. There's kind of that year fog.
Exactly.
For that 12 months.
It is like at least a year that it takes for women to kind of clear their heads and do this reset and get the confidence back that they can do it on their own.
Right.
And it just takes that little reset period to be able to know that, hey, it's going to be fine. They got it.
We've got a couple of YouTube videos, A Wiser Retirement on our YouTube channel, tips for sticking to your financial goals, stay invested for the long term, should I hire a financial advisor, or DIY. Those are all short 3-5 minute videos that we put up there for educational purposes, if I can spit that out. Thanks for listening to today's episode. If you're interested in learning more about Wiser Wealth or want to schedule a consultation to meet with one of our fiduciary financial advisors, such as Missy, you can do so by going to wiserinvestor.com, or you can click the link in the episode notes. Thank you, Missy.
Thanks, Casey.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This episode was produced and edited by Ken Hoadley. This podcast is strictly for informational purposes only and is not to be considered as investment advice or a solicitation to buy or sell any financial products, securities, digital assets, or any other investment vehicles, or a basis to make any financial decisions. Wiser Wealth Management Incorporated is a registered investment advisor with the SEC. The host and/or guest may personally own securities, digital assets, or other investment vehicles mentioned on this podcast. Neither the host nor guest of the show are compensated for their participation, and no referral fees are paid to or received by any host or guest for clients, listeners, or similar interests. Investments involve risk, and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor, tax professional, insurance professional, and/or legal professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.